Wall Street is flying blind. We don't have any jobless claims, no inflation updates, no payrolls. We don't have anything. The government shutdown has cut off all of America's economic dashboard, leaving investors trading this market at record highs with zero fresh data to back it up right when it's really important. Now, some might call this risky, others will call this complacency at the highest level. Despite this government blackout, it's shutting down. Stocks pushed higher yet again today. The Nasdaq led the way with a 0.39% gain. We've seen the S&P climb 0.06%. The Dow beat the S&P, rising 0.17%. That puts U.S. indexes at 70 record closes this year alone, including 30 each for both the Nasdaq and the S&P. Chip makers kept the rally alive while banks and energy stocks took the day off. They really cooled down for the day. It's just a market that refuses to quit. Now, as one Wall Street veteran likes to say, as long as the music's playing, you've got to get up and dance. But when the beat stops, and right now the data stream is dead silent, that dance floor can turn ugly in a hurry. Now, this shutdown has frozen the very tools investors use to track the health of the economy. We have the Department of Labor coming out and they released this document showing that their offline weekly jobless claims that we're supposed to drop today, those are gone. Friday's September jobs report that everybody and their mom was waiting to see, no, sir. It's on ice until the government reopens. Now, here's why that matters. The Labor Department, the labor market has been softening since late spring, pushing the Fed into its first rate cut of the year. A lot of people are hoping that continues, and then at the same time, inflation has really been creeping higher. Like I said, at the same time, forcing the Fed to walk this razor's edge, like this tightrope, cutting too fast and letting prices spiral, or just letting the labor market turn into shambles. Now, without these reports that we're waiting for, and I got this calendar up for you to look at, we're essentially in the dark. And the Fed's operating in the dark. So if this shutdown drags on for weeks, it could even delay or even eliminate critical inflation data, including this CPI, this consumer price index due for October 15th. And in the worst case scenario, the October CPI might not even be published at all, which means the Fed wouldn't see CPI, PPI, or PCE data, which its entire inflation playbook is built on for the month. Now, historically, shutdowns don't crash the economy. Economists estimate that GDP takes about a 1/10 of a point hit per week the government is closed. Even the 35-day record shutdown back in 2018, 2019, that only shaved off about a 1/2 of a point. Now, we heard from Scott Bessent today, and they're saying this time is different because Treasury Scott Bessent warned today that the shutdown could chip away at growth, GDP, and working Americans' paychecks. And then at the same time, we got these prediction markets playing the odds. They now see a 63% chance that the closure lasts beyond October 10th. And if it does, October's jobs and inflation reports could be permanently disrupted, which is no bueno. And what's even more no bueno is uncertainty, because markets hate uncertainty. But right now, traders are really shrugging it off. It's all good in the hood right now for markets because they're reaching all new highs, it seems like, every single day. And that's the real danger. Not the shutdown itself, but the risks of missteps in policy, blind optimism on Wall Street, and complacency creeping in at higher highs. Meanwhile, we heard from Goldman today, and this is really away from the trading floors, the financial squeeze is getting worse. So a new Goldman Sachs study shows 40% of Americans are living paycheck to paycheck right now, and another 40% say they aren't making meaningful progress towards retirement. So that's not looking good. The cost of retirement has been rising nearly 4% per year for 25 years, so it's far outpacing inflation. And by 2033, Goldman projects over half of Americans will be living paycheck to paycheck, and the average cost of retirement will top $1.7 million. Good luck, Mom. I'm living with you forever. Make my bed in the garage. So housing, childcare, healthcare, they're all eating bigger and much larger chunks of household income, forcing younger Americans to delay milestones like buying homes, getting married, or even starting families, which doesn't look good. So yes, the indexes are hitting records, but investors are celebrating while the Fed is flying blind, and the economy scoreboard, well, that's frozen right now, and everyday Americans are falling further behind on their retirement goals. The longer the shutdown lasts, the bigger the risks of policy mistakes and market shocks become, and right now, the calm you see on Wall Street might not be confidence, it might be complacency. So we'll keep on watching this. We'll see how it unravels going forward. I'll be here to talk about it, y'all. Hope your day was awesome, and I will see you soon. See you later.